If your AI portfolio only includes NVIDIA, it means you're out of touch with the market and have even misjudged the core theme. This round of Wall Street market activity has seen a crucial turning point. Micron and SK Hynix have successfully joined the trillion-dollar market capitalization ranks. The memory sector, once considered a cyclical rebound, has now officially topped the AI core sector. This isn't just a simple sector rebound. It's a significant signal of a complete shift in the investment logic of AI. In the first half of the AI era, the core market logic was that GPU computing power was king. NVIDIA monopolized the industry's profits with its computing chips, becoming the only core target in the market. However, in the second half of the AI era, the underlying logic has completely changed. Even the most advanced GPU architecture and the most powerful computing power are ultimately ineffective without sufficient data transmission support. High-bandwidth memory, HBM, is no longer just a peripheral component of AI devices. It's the core foundation for AI computing power, the core data channel supporting the entire AI industry, and the second largest core profit driver after GPUs. First, market perception reconstruction. HBM sheds cyclicality, upgrades to core AI infrastructure. Most investors still cling to traditional perceptions, attributing the rise of companies like Micron to memory inventory clearance and a cyclical rebound in the industry, believing it to be just a short-term fluctuation. However, this is a typical case of cognitive lag. The core of this rally is not a cyclical recovery, but a fundamental reshaping of the industry's valuation logic. GPUs are like the engine of the AI industry, while HBM is the core pipeline for transmitting data. Currently, with the continuous iteration of AI models and the expansion of computing power, high-end computing chips have significantly increased requirements for data transmission speed, bandwidth, and stability. The carrying capacity of data channels has become a core bottleneck limiting the efficiency of AI training and inference. This has also completely rewritten the industry's attributes. In the past, Micron and SK Hynix's core products were ordinary memory, and their performance fluctuated with the industry's supply and demand cycle, making them typical cyclical stocks. Now, their core value has transformed into providing high bandwidth, high-throughput data transmission capabilities, making them indispensable infrastructure for AI servers and the deployment of large-scale AI models. The core of Wall Street's recent trillion-dollar valuation reassessment is not the profit boost from rising memory prices, but rather the clear definition of its new positioning. HBM is an irreplaceable, rigid revenue stream in the AI arms race. The larger the computing power expansion of NVIDIA, AMD, leading cloud providers, and AI server companies, the stronger their demand for HBM, and the higher the profitability certainty and valuation potential of this data channel. From this point on, related companies have completely shed the cyclical stock valuation system and switched to the AI infrastructure growth valuation system. Second, the core essence of the market trend, the HBM capacity black hole triggers a redistribution of value in the industry chain. The core driving force of this round of market trends is not short-term supply and demand imbalance, but the capacity black hole formed in the HBM industry. The core of competition in the current market is no longer about acquiring goods at low prices, but about stable capacity supply. The inability to rapidly expand HBM capacity stems from its extremely high production barriers. It requires highly coordinated efforts from multiple stages, including advanced processes, TSV, through silicon vias, multi-layer stacking, precision packaging, and yield testing. The ramp-up period for capacity across the entire industry chain is extremely long, and any limitation in any stage will restrict overall delivery capabilities. Currently, Samsung, Micron, and SK Hynix have become the core bottleneck controllers of the AI industry. The logic of AI industry dividend distribution has been completely rewritten. The first half of the dividend was concentrated on front-end computing power GPU manufacturers, while the second half continues to shift towards back-end infrastructure. The more aggressive the iteration of computing chips, the more frenzied the capital expenditure of cloud vendors, and the larger the scale of AI models, the more prominent the HBM capacity gap becomes, and the more the industry chain dividend concentrates on the storage and data channel ends. This is not short-term market sentiment speculation, but an inevitable trend in industry development. Third, second-order investment opportunities, capital spillover, locking in 3 core industry chain entry points. After Micron and SK Hynix became recognized core brands in the market, major funds will not stop there, but will continue to spill over along the HBM industry chain, exploring second-order core opportunities that have not yet been fully priced, focusing on 3 key revenue streams. 1. Advanced semiconductor equipment track. HBM capacity expansion and drum process upgrades rely heavily on high-end semiconductor equipment. While these types of companies may not show significant short-term elasticity, as core assets at the bottom of the industry chain, they are rigid beneficiaries of the HBM capacity expansion cycle, possessing strong earnings certainty and valuation recovery potential. 2. Semiconductor materials and processes. HBM production not only relies on lithography equipment but also requires substantial support from thin film deposition, material processing, and advanced processes. Companies in this sector are located in the core middle stages of semiconductor manufacturing, deeply integrated into the entire HBM mass production and stacking process, and will continue to enjoy the industry's capacity expansion dividends, making them hidden core beneficiaries. 3. Advanced packaging and testing. The core challenge of HBM mass production lies not in chip manufacturing, but in multi-layer stacking, precise interconnection, yield control, and mass delivery. Advanced packaging and testing are the final key to ensuring HBM capacity implementation and stable delivery. As industry capacity demand explodes, related companies will experience a revaluation. Overall, the capital flow path in the second half of the AI era is clearly traceable. GPU computing power, HBM storage, advanced packaging and testing, semiconductor equipment and materials, with the industry chain dividend spreading layer by layer. Fourth. Core risks of the market, distinguishing between core dividends and sentiment-driven speculation. A clear main theme does not guarantee a general rise in individual stocks. This round of market activity carries 3 core risks, requiring avoidance of blindly following the crowd. First, the risk of high valuations for well-known brands. Micron and SK Hynix have already achieved widespread market consensus and their valuations have surged. Further gains will no longer rely on industry stories but must be supported by solid order books, production capacity, performance, and gross margin data. If fundamentals fall short of expectations, they will face valuation correction pressure. Second, the risk of speculation on lagging themes. Some stocks that merely ride the AI and storage hype wave lack actual HBM business, core customers, and performance support. Their rise is solely driven by market sentiment and will be among the first to fall after the market downturn. Third, the risk of premature valuation inflation. The AI industry chain often exhibits the characteristic of logic first, stock price ahead of time. Even if the industry trend is clear, if the stock price rises too much in the short term, overdrawing future performance, a period of valuation digestion will follow. Fifth. Practical trading strategies, precise responses based on market type. 1. For those holding core leading stocks, avoid blindly taking profits or adding to positions. Focus on 3 key signals: healthy upward momentum, whether key support levels hold during pullbacks, and whether financial reports and company guidance confirm the current high demand and tight capacity situation in the HBM industry. If the trend remains intact, continue holding. 2. For those looking to chase highs. Avoid buying at high prices driven by sentiment. Patiently wait for the sector to pull back and for volume to cool down. Wait for confirmation of the market's sustainability before entering the market. Refuse to follow short-term hype. 3. For those seeking second-tier opportunities, abandon stock selection logic based solely on themes and concepts. Focus on essential segments of the HBM industry chain, targeting core revenue-generating sectors such as equipment, materials, and packaging/testing that ensure capacity utilization. 4. For those with low risk tolerance, avoid high volatility lagging stocks. Prioritize core leading stocks or industry ETFs, using a stable strategy to participate in the main market trend. 6. Summary: AI investment enters a new phase. The trillion-dollar market capitalization breakthroughs of Micron and SK Hynix are not isolated stock rallies, but rather a landmark signal of the evolving investment logic in the AI industry. The first stage of AI was market-driven pricing of GPUs, computing power. The second stage was market-driven pricing of HBM, hardware-based machine learning. The future third stage will see continued capital flowing towards bottlenecks in production capacity, with equipment, materials, packaging, and testing subsectors experiencing sustained value reassessment. The current market theme is clear: in the second half of AI, computing power is no longer the sole core factor. Data transmission and production delivery capabilities are the key to industry competition and investment profitability.